look at the biggest responsibility of any founder slash management, it's about value creation, right? Value creation for all stakeholders, be it shareholders, be it employees, be it themselves. And value creation can happen for a company. The simple point that we have been urging companies or suggesting to companies that the value creation journey cannot only happen in private markets. And there is no magical number as such that value creation in public markets happen only if you list at $1 billion or so, which is like in India, like 8,500 crores or so. There have been enough examples wherein the company listed at very small market cap, like E2 in our case listed on the small exchanges with sub 100 crores of market cap. Over a period of time, moved to the main board and they even touched about 7-8,000 crores. I think now the stock price has corrected a bit, which is about 3 to 4,000 crores. But the point is that they took the plunge, they built a company in the public markets and created not just shareholder value, but also value for their employees. They could attract great talent. Even as simple as banks wants to lend to a company which has liquid stock, the comfort of the bank to lend to the company goes far higher. So essentially that piece around value creation for everyone still stays true. And what we talked about in the article was that there are some common misunderstandings or myths. The biggest one is the founder thinks that if they go public, then their time in answering to analysts or investor goes up. We believe that the biggest responsibility of the founder is, or the CEO rather, is to be answerable to investors. Even as a private company, you have to answer to your investors. And in this case, I doubt it would be quarterly, it would be more of a monthly exercise. And as your company scales up, most of the companies have investor relation teams, investor relation head, whose job is to take care of this and reduce some load from your shoulders. So that's the first myth. The second one is about small companies don't get great high quality investors. One company, if you look at, let's say, Zaggle, right, which listed in 2023. On their cap table, there is LICMF, there is ICICI, there is Kotak who are there on the cap table. And all these names that I talked about are like blue chip names in India. Third point is about small companies or companies which have small market cap at listing find it difficult to raise follow on capital, which again we think is a fallacy because one is, of course, banks line become open to you, but at the same time, there have been enough examples. Like India Mart is a classic example which listed below 3,500 crores of market cap. They went down and then they did a QIP. So as the company grows, you have enough options to raise capital in public markets. And you could pull across any data set. The amount of capital deployed in public markets far exceeds amount of capital deployed in private markets. So that again, in my mind, is a fallacy. So those are some of the fallacies or myths which we think, if looked at in the right fashion, even 2-3,000 crore market cap companies is the right way to go. Fourth, of course, like one thing to stress upon is that we are not suggesting that any company should just go and IPO. The public markets expect that you have predictable P&Ls. You are now in today's market, you are profitable or near profitable, and you can show the investors a path to be profitable. So please don't misunderstand that we are guiding you that any company can go and list in the public markets. That's not the expectation that we are setting. Thanks.